Hello, everyone. This is James Bishop here, and I want to welcome everybody to our Sunday service session. If you guys can hear me and see your screen, I'm going to flip it over one time. If you can see your screen just flipped on over, just give me a wire yes in the chat box there. If you don't know what the chat box is, hopefully you can see the screen, and then I can show you. This. Down here on your Zoom window, you should have something looks like this kind of, and it should say chat. You hit that button and you'll be able to talk directly to me, ask questions, all of that. So we don't need that. Bo, thank you. Jerry, thank you. Rodney, thank you as well. Beautiful. Looks like, excuse me, everything is working and in order today. Michelle, good to see you. Hope you're doing well. Um, and awesome. Well, it looks like we got a lot of you guys in here on time. A couple of things that we got to go over real quick. First and foremost, I'm not a commodity trading advisor, simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk, and take on that risk. And any trades I show today, if you guys decide to take them, just know you're doing so of and on your own volition. Now, for those of you guys that don't know who I am, my name is James Bishop. Been in trading education for 15 plus years. I'm the founder of a managed fund, which is absolutely killing it right now. I'm proud to say. Founder of a retirement and estate planning company. More on that in a little bit. I also have my MBA in finance and global portfolio management. And as of today, Sunday, April 27th, 2025. I am now on to the all but important dissertation phase, okay, of my doctorate program. So hopefully in the next year, I'll be officially Dr. James Bishop. Now, here's one thing I'm going to let you guys know. This is not even a shameless plug. I don't know if this is just a plug, okay? This is just a plug. Is coming up on when I get into this dissertation, right, I'm going to be doing an experiment and it has to do with trading and financial literacy and things like that. I'm building out the programs and stuff. I'm building out the programs and stuff like that. But when I do this, okay, I need participants and I'm going to be leaning on y'all. So go ahead and give me a yes if you wouldn't mind participating when I go for that. I know some of you guys definitely will. Some of you guys, hey, I am not too proud to beg, okay? Philip, good to see you. Thank you so much. Michelle, thank you as well. Peter, thank you. Beautiful. I think it'll be great to have all of you guys participate because you are is what this dissertation is for, right? It's not for me. It's literally to improve things for you guys. And it's just a true passion of mine. Now, real quick, I always like to remind people because it's somebody's first time in this. The purpose of this webinar today, we're not here to sell anything. I am not selling anything, okay? Not selling anything at all today. I am going to show you guys systems I use, stuff like that. If you got questions about that, you'll be contacting Brent, Antoine, Andy about that stuff, okay? You're not going to be coming to me for that. I'm going to be showcasing a couple of those tools. Like I said, we're here to talk economics. What's going to affect the market and why, and what's going on with the market and why. And then we're here to learn from all of you guys, okay? And offer insights into trading opportunities as well. So it's because there are some that are coming up. Now, quick housekeeping item. I have started a Discord channel, right? You guys should see it on your screen now. And what I do is I just post some relevant news stuff, any webinars I'm doing, stuff like that. What I want to do for those of you guys that are in our kind of trading education family, I'm going to create an invite right now. Now, here's the problem. Okay. This is not me. I'm just letting you know. Okay. I did not choose to do this. This is by them. All right. Them meaning this company, they say that I can only do an invite that lasts 7 days. Okay. So I'm going to send you this link right now. If you have Discord, join the channel. If you don't, get one and join the channel. This is the link. And I'll be sending out, webinar invites, what's going on this week with, Silas and Hubert, as well as kind of any trading ideas. Now, here's the other thing. I think this channel will let you guys, right? Will let you guys chat with me as well. So on Friday, I posted, hey, let me know what you guys want to see, things like that. And but I hadn't gotten anybody say anything yet. So if there's no permissions to chat with me, then we'll fix that. But I see you guys joining already. That's awesome. Thank you guys so much for that. This is another way I'll be able to communicate with you guys weekly. And I'm going to be doing something towards, there's two things that are going to be happening. I should have put this in the housekeeping items. One, I'm going to be sending out what I call tomorrow's news today. All right. So I'm going to look at Monday's news on Sunday and send you a video, right? It'll be Sunday through Friday, and we'll send those videos on just the news, how it would affect things like that. Okay. Kyla, good to see you. And, forgive me really quick. So you guys will see those news videos come out. The other thing that I'm going to be doing is daily morning sessions. We're going to kind of like a market, a morning market preview session, as well as into opening bell, any quick trades we should take, things like that in futures, forex, cryptos. We'll talk all markets in that first quick hour. That's going to be coming out as well. And then lastly, we're building, I'm in the process of building basically like a streaming site. So you guys, instead of having to go to a Zoom and have Zoom load and download and all of that, you'll actually be able to just literally go to like sundayservice.com, and bam, you'll be able to log in, as well as like dailymarketsession.com, and it'll go just a direct streaming site. We'll be able to interact and see chats and all of that as well. So that's all coming in the next few weeks. But the Discord, I see people joining in. That's awesome. Look at that. We got our first comment in there. Thank you guys so much. Keep up the interaction, right? This is for everybody here, right? It's not just for me. I want everybody to be a part of it. It's not one dictating to many. I want to be a part of what you guys are going through, experiencing, things like that. Okay. With that all said, who's ready to hit some markets and talk some news? So, where do we start? Well, let's start with what's coming up this week so you guys can kind of prepare yourselves mentally. And I'll talk about the big volume days of the week as we go through it. So, excuse me here. I got some tea that I'm drinking. So on Tuesday we have nothing on Monday. No announcements coming out Monday. Tuesday, goods trade balance, preliminary wholesale inventories. Not really big announcements, but we'll see what's our trade deficit looking like, and that'll change forecasts. When we also have job openings. This is a very important, interesting economic announcements. Now, one of the things I don't let me just be real, like I don't really trust this stat too much, mainly because you have companies that are opening up 10, let's say 10 different positions for the same job, just so they can get more index higher on LinkedIn and all those job boards and stuff like that. Right. So if let's just hypothetically say that Goldman Sachs was looking for an analyst. Well, if they post 10 different analyst positions, they're going to index higher for somebody who types in analyst than, if they only posted one. and they can get away with that and tell and report, hey, we're looking for 10 jobs, but actually you're only looking for one person, right? We got 10 job openings, but we got one person we're actually looking to hire. So it's one of those deals, and it has come down a lot as the government has cracked down on it and companies have cracked down on it. But this still gives us a good balance of, hey, how many jobs are open right now? Where are those jobs, right? Where are those jobs? That's the other. If we look back, back in 2021, it was at an all-time high of like 11 million, and then we've seen it drop precipitously as we saw also, uh, job growths are people getting re-employed again. ADP non-farm, this is not the regular non-farm, but it's still a decent marker. Now, I've seen this being way off. I'm talking non-farm payroll came in at like 400,000. They were predicting 800,000. Right now, the reason why ADP is a red announcement here and a high index announcement is that it used to be the largest payroll company in the country. But now, with so many small to mid-sized businesses growing and using other, new entrants came in, they're not the largest. GDP, we've talked about GDP before. We'll talk about it again as well. GDP is a very, very important marker because if this number, looking at quarter over quarter GDP, we're last quarter we were at 2.4%. This quarter they're forecasted at 0.4%. If this number goes to zero or negative, that is not a good thing, and we are heading towards a potential recession. We also, same day, have what's called the PCE price index. Okay, PCE price index. That stands for price consumption expenditure. And that is the real measure of inflation that the Federal Reserve uses. Okay, that's the real measure of inflation that the Federal Reserve uses on a monthly basis to determine if, prices are getting higher, prices are getting lower. Now, this one, being that the tariffs and things were delayed, we probably won't see it be too high. We'll actually probably see it come down a little bit. If these tariffs continue to push through, and we're going to talk about those in a little bit, then we will see some big changes. I'm going to talk about pending home sales in just a little bit, and then coming into Friday, which is probably the biggest. I'll tell you your high volume days in a second, but Friday is non-farm payroll. That's going to be big. Okay, that is going to be the big announcement and unemployment numbers as well as earnings. If earnings are flat, unemployment is up, or non-farm payroll is a miss, look for a down day. Just let me repeat that just in case. If earnings are flat or down, if non-farm payroll is down, lower than expected, or unemployment rises, look for a down day in the markets. All right, your three big days that you're going to be Wednesday, Thursday, Friday. Those are going to be your three big days for trading this week. Monday, I think, let me just make sure. Our markets closed Monday. Um, just want to make sure. Okay. Okay, it is. It says everything is open. Let me just make sure. Um, no, I didn't know if with the Pope, if there was, going to be some observance of, market being closed or anything like that. Does not look so. Just wanted to make sure. Um, but I figured might as well check while I have you guys here so we know. Um, the next thing I want to get into. So, any questions about the news or anything like that? Really quickly? Any questions on news or anything like that? I'm gonna open this up wider, larger, so I can see everything. Nope. Good to go. Okay. Pending home sales. This will be interesting because if we look at last week, we had existing home sales down 4.02 million. Um, and new home sales, let me filter this. Non-housing apply. So pending home sales, let me go for the whole month. So new home sales, they were slightly better than expected at 724,000. Existing home sales at 4.02 million. Can being perfectly honest with you all, I do expect and suspect that there is going to be another major correction in the housing market. Um, I'm going to go to the chart really quickly just so I have some white space here to kind of talk about this. All right. And I'll type everything out. So I've talked about this once before, but I'll type it. I'll ask again. Currently, there are 902,000 homes listed on MLS and for sale by owner. Okay. That's the number right now, as of earlier this month. How many vacant homes are there in the US right now? Want you guys to answer that. Your best guess, nobody will be wrong. I'll be able to see it. Only I'll be able to see it. Just let me know. What do you think your guess is? Okay. I'm going to read some of the numbers out, and we'll see what you say. So type it in really quickly for me. I got 6 million, 2 million, 350,000. Keep them coming. Don't be shy. 2.5, 6, another 6 million. 1.2. Stuart, you're on it. There are, oh, what just happened there? 15.96 million vacant homes in the US right now. It is literally what? 16, nearly 20 times, 16, 17 times the amount of homes listed for sale. And the reason for that, right? A lot of these are owned by hedge funds. Some of these are owned by, people that passed away and things like that. And we're already starting to see the little cracks here and there. Okay. We're already seeing the cracks here and there. Michelle, so I have access to Bloomberg terminals and another tool called FactSet, and that's where I got that. And then that's where I got a lot of these numbers. Okay. Trust me, I'm not just throwing out stuff from TikTok or anything like that. So, G, you got it. He said, so we need to build new homes. Why? That's the other thing, right? There's 15.96 million vacant homes. Then you think about how many homes are coming on board, right? Coming on board. Then, okay, so think about this, right? We're building more. We have homes coming on board. Well, yeah, Philip says, hey, includes seasonal homes for people with multiple residences. Yes, it also includes, Philip, countries that buy U.S. homes with multiple residences, right? Like, for instance, there's an entire golf course and they bought, I think, 30 homes in this neighborhood and the golf course in the neighborhood here in Lake Mary, where just north of where I live. And I know this because I know the owner of the golf course previously. He's one of the people that's been a personal mentor to me, and he told me the number that he got, and it just was unbelievable. Like, it was just unbelievable. It was such a number that no matter what it was you were selling, you would probably say yes. Okay. And so now those homes are still sitting vacant, and the guys are letting the golf course go. They don't even really care that much. They're putting some money into it, but it's just, it's crazy to see. But anyway, so you have 15.96 million vacant homes. On top of that, we're building. On top of that, right, as the baby boomer generation, which this is no offense to anybody in here, as the baby boomer generation downsizes or they pass away and leave these homes, there's going to be more vacant homes. Now, granted, there are some families that will move into that family home, but then there are some families that are like, I live in North Carolina. My parents lived in Texas. I'm not moving from North Carolina to Texas. I have my life here. Why would I keep that home? Sell it, you know? And here's the crazy thing, right? Is the other is Florida, for instance, right? So in two cities in Florida, the Villages and Ponce Inlet. And now this is I'm gonna tell y'all, don't be moving here to Florida. We got killer moth, we have killer caterpillars, we have alligators, crocodiles, sharks, hurricanes, tornadoes. It's hot. You guys don't want to live here, okay? It's not that it's beautiful and there's a lot of golf courses and it's fun and it's great. Just come on, stay where you're at, okay? Come if you want to, but don't raise the prices of the real estate around here. Um, no, joking, of course, but it's the thing is that in Ponce Inlet in the Villages, Ponce Inlet, right, has had a 40% drop in real estate prices month over month. And then on top of that, the Villages has had a 30% drop in real estate in, I think, quarter over quarter. Okay. So now the next thing. Oh yeah, Steve, you got it. Insurance, right? That insurance too high too, right? You can't be missing that too. No, don't you don't want to live here. Just joking, of course. The next thing is this little tidbit. Now, this is a screenshot I took from Bloomberg, my Bloomberg terminal, and this is serious delinquency rates. Okay. Now, just for perspective, this was 2008 and 2009. Okay. 2008, 2009. This was the number of individuals that were seriously delinquent, and that was around 6 million. Right now, that is 6.125 million people are 2 or more months behind on their mortgage. The ones that are first time home buyers and VA loans are the biggest two groups. Now, that information, um, and let me open one other. Here we go. So this one is by loan type, right? FHA and VA delinquency rates are the highest. Now, here's the other part of this is if we look, some states are really high, like Mississippi, Louisiana, South Carolina, West Virginia, but even like Florida, right? You're looking at 1.5%, Texas 1.8%, North Carolina 1.5, California is 0.9, right? But the other is renters, okay? Renters are behind 2 or more months, 9.5 million renters. Now, that's one of the things that has, is a pause for concern, right? Is a pause for concern is the real estate market. Now, the other thing that occurred, all right, is this right here. Now, I posted a video in the Discord. Now, if you're just joined the Discord, which I hear a lot of you guys did, if you scroll up, you should be able to see it. It's this right here, and it came out. I posted at 5:28 p.m. If I need to repost it, just somebody type in the Discord channel, please repost the video. But this is a very, very, very interesting thing that has occurred, and this is all based around a very interesting thing that had occurred. There's a company called I think it's CTAL or CATL, and they're a battery company, and they built a sodium battery. A battery instead of lithium ion, it's sodium ion, right? There's a whole lot more salt in the world, and it's easier to get out of the earth and the water than it is to dig up lithium. So This battery, and it goes farther and charges faster and less waste and all sorts of other great stuff, right? Great company. Could be doing some amazing things. They were going public, or they are going public on the Hong Kong exchange. All right. Well, two US banks were backing them. It was JP Morgan and I can't remember the other. Maybe it was Goldman. I'm not sure, but JP Morgan was one of them for sure. Well, the government, the US government, told the banks to pull out and you can't back them. You can't back them going public. So the banks did. Well, China, which at prior to this held, 839 billion dollars worth of US debt, prior to that announcement of the banks going, they had 839 billion dollars worth of US debt. A week later, they have 760 billion worth of US debt. So they started cashing in US debt, which what will that do? And what's the down chain effect to the economy? And this is why, I talk about and look at and understand what kind of we're going to get into right now, which is the charts and the technicals, okay? Because I believe that there's a further, I should say, a deeper drop potentially coming if things continue to play out. So, how much of a down market should happen in order for us to liquidate, or do we just hold on and wait for it to bounce? That's a great question, Kyla. So, I one on one absolutely can advise that and help people and stuff like that. In a group session, I want to know a little, I need to know a little bit about, things before I just open my mouth and sound dumb, right? And so at the end of this, guys, I'm going to give you all a link that you can book time with me and my team one on one, as well as talk to you guys about some investment opportunities that, I'll share with you, even here today. I'm going to share an investment opportunity that we have for you as well. Oops, hold on. Give me one second. I'm going to try to get a screenshot of it right now because I just got this email. Perfect. Okay, great. So let's go in the charts, and we'll talk a little bit. I'm going to start with the S&P 500. I just use the SPX just because it's the same number and it's easier to use. Okay. So look, it does not take Ray Charles to see that this market has broken the upward trend line that we were in, and I'll delete all these drawings. It does not take Ray Charles to see that, look, we broke the upward trend line that we were in, and we are now in a downtrend move, right? Everybody can see that. You could be sharp as a marble and see that. So I'm not going to even bother showing you guys where the trend broke and all of that stuff, okay? What I am going to do is on this uptrend, if we go back a little bit, there are certain things that are known as market gaps, okay? Like I'm going to zoom in right here and I'm going to highlight this with an arrow. Do you guys see that gap between this red candlestick and that green candlestick? Give me a wire yes. If you guys can see that now. Great. One, this lets me know you're paying attention. Two, it lets me know that my charts are showing. Because sometimes I am notorious for the pause, okay? But you see, the market gapped up, and what happened? It wavered a little bit and came back and it filled that gap. Now, a gap is a market inefficiency, and there's something that's known as efficient market theory. To boil it down in the simplest statements, it basically says that the market will reflect all available information at any given time. Well, it may also create explosive moves where the market gaps and then they'll pull back, fill the gap, and then it'll go, right? They're like breadcrumbs. And right now, there are only a few gaps left in the market, okay? One is right there at 42.49. Another right in here, right? And then if we look, We have this gap here was filled. This gap was filled. This gap has been filled now. And now there's one right here. And there is one right there as well. So there are only four gaps left on the daily chart of the S&P 500 that are left to be filled. Now, I'm going to show you technicals, and then we'll also talk fundamentals. Hey, Stuart, it's the same gaps on the SPY, right? So the SPY is the same, and if you look at the S&P 500, it's the same, right? It doesn't matter. SP 500, right? If I look at the S&P 500, it doesn't matter. The same gaps exist on daily charts, on every single thing, on every single one. So the pricing doesn't the pricing, yes, the SPX gaps because yeah, there's trading that occurs, but it's not like it's doing so and not doing it on the others, right? Um, so that's why it does, right? And remember, you're trading the ES on the futures, not the SPX, right? So the ES is S&P 500 futures. It's not SPX is what you trade if you want to trade the S&P 500 composite. We look at VOO and there's still gaps too, and that's an ETF on the S&P. But anyway, I digress. So right here, okay, if we now I'm gonna start by adding a couple of indicators that I think some people can use if they want. I'm also going to add on. This is hedge fund trender and not the energy gauge. I want market energy, and I'm gonna delete that. And then on hedge fund trender, I don't like all the dots and stuff. I don't use it all. This is just it's just something I don't use, so I take them off when I can. Um, hmm, why didn't that go away? And that one, and this one. Hmm, that's weird. Well, never mind. We'll take that off for now. So I'm going to put on three EMAs. There's a 20 period moving average is what people use a lot of. And we'll leave that as blue and I'll make it thicker. There's a 50 period moving average. We'll make this red and I'll make it thicker. And then there is a 200 period moving average. I'm going to make this one black. And I'll make it thicker as well. And 200. Now, the 200, so how a moving average works is that basically it looks at the last 200 candles or the last 50 candles, the last 20 candles, and it tells you where price should be based on those last number of candles, right? That's what that means. Well, there is two crosses that people look at all the time. There is what's known as a golden cross, and then there is what's known as a death cross. A golden cross is when the 200 period moving average is below the 50 and the 20, right? Or at least below the 50, right? The death cross is when you have the 200 period moving average above the 50, which right now, as of last week, sometime or first week of April, we had that death cross happen. Okay. Um, Now, what market energy is, for those of you guys that don't know, it's a tool that basically what it does is it tells me where volume and sentiment lie for the market. Okay, so when green's above red, we know that buyers are in control, and when red's above green, we know sellers are in control, right? And it works really well on the crosses. So, like for instance, you would have sold here and gotten out, here and you would have made some pretty darn good money. Okay. But I digress. I'm not, I just want to explain what you're looking at. Now, the next piece of this equation, right? So we have this death cross, right? But the 20 period market is above the 20 period. It's approaching the 50 period. We have a market gap that this is approaching. And the other side of the coin is Fibonacci's. Now, for those of you guys that don't use them. One of these days I will share out how mine are formulated, and that way you can start using them. So we had the first fib formulated there, and that is a 50% retracement. And so we know we're going to the 1.618, and that ends there. And so we have basically a 618 retracement at this gap. And then notice where the market falls to at that gap that's below of 42, 49, 36 that we talked about. And it seems like forever away. Well, that is another 23% market fall, which means from the height of the market to that point, that is a 31% market fall. Now, what do you need to do and how do you take advantage of it? Well, if you're a futures trader, look for the waves of the market, look for selling at advantaged opportunity or sell biased opportunity. If I go in and I go to, let's say on the ES, if I'm going to try to add this indicator again, if I see an opportunity to sell in this market, then I absolutely will take it. But I'm not gonna look, we know that the market is going to wave, right? It's not going to just go up forever. It's not going to just go down forever, right? We know it's going to wave and then we know it's going to come back and we know that. So if I know that the market is going to wave, well, I just have to take advantage of the next major wave in the market. Okay? So what I'm looking for on the ES is, hey, if market energy on the larger time frame is telling me to sell and all the others are telling me to sell, then I'll sell. If it's telling me to buy, then I'll buy. Now, the next thing I'm going to do is I like looking at historical data. This is from Silas Peters. It's called Trend Insider, really cool tool. But what it does is it shows me all the years and all of the history from 1993 to today of the S&P 500. It only goes back a certain number of years, but what I like to compare it to is what it's doing now, right? So this is where it's at now. We saw that April 21st was a down day. It was a down day for 20 years ago, 10 years ago, and let's call it 30 plus years ago from 93 to today. And then the market rallies up a little bit, and then we should expect another fall early May in that May 10th area. And then there's that sell in May and go away kind of stereotype where we get our next big fall in June. Now, comparing this to, let's say, a 2008, 2009 market where we did have a recession, that would also prove to be somewhat useful. So I'm going to get rid of the 93. I'm going to get rid of there and there. So we can see, okay, where are we looking at comparatively? So, this again, giving us, that April 30th to May 10th, that's a pullback time. So May 10th is where we're looking at another big pullback. And then again, May 18th to the 21st, end of May. And then really from all of June was selling in those months. And then what really happened is late September going into October for those 2 years, those were big selling months. So what I'm looking for is, all right, I have a few dips in May that I need to pay attention to, and then the big dip late this year. Now, if something happens and China dumps more of their bonds, right, and the U.S. debt, it will cause markets to lose confidence. That's what you're really trading is confidence, right? People's reaction to the moves that are making. If we see inflation go up and interest rates go up, that's going to make people lose some confidence, and that's going to drive the markets lower, and we will see this. And there is, let's see. So looking at this, there's an opportunity for a sell. There's things you can do to protect yourself in those sells, right? There's investments that Kyla, I know you're a part of. Pete, my man, I know you're a part of as well. I got a few of my clients in here as well, which is great to see. But there's these investments that have things like 0% floors. Well, you can never lose. There's things where no matter how much the market falls, I don't care if it's 70%, 100%, 30%, you lose zero. But when the market starts to gain, you gain at near the rate that the others do. That plus there's something that just came out here, and I'm going to share this with everybody, right? I just got this email. It's basically when you invest, okay, when you invest in this specific type of investment that I'll talk to you about, you get a 30% guaranteed bonus, okay? Plus, every year you don't take an income from it. So if you're planning to retire in 10 years, you get an additional 9.5% every single year that you don't take an income. So let's say, right, you put in, I'm going to just make up some numbers, right? Let's say you put in $100,000, okay? And we're going to times that by 9.5%, right? Which that's 9,500 bucks times, let's say 10. That's $95,000 that you get. Plus, you get a $30,000 bonus. So you get $130,000 plus the $95,000. So you instantly, without even making a penny from the market, your money's still invested, by the way. And even if it goes down, you lose nothing. Without even making a penny, you have a $225,000 return just from that, right? Now, again, this is not the forum to talk all day about that stuff and all that. This is what I'm going to do, right? I'm going to do this real quick, and I'm going to give you guys like a minute or two to talk about this. But I'm going to. This right here is my link, okay? Um, 25K, I think it is, Kyla. But that is my link right there to book time with me. Okay, it'll be me and one of my teammates. If you want to book time, there's no pressure, no obligation. This is just for informational purposes. If you want to book time, book time. Okay, that's a link. You can, let me make sure it still works just real quick. Okay, good. Yes, it does. And I have blocked off, pretty much no, just Sundays are blocked off because I have this session and another session I speak at as well. So all the way until the 22nd. And so you can definitely find time to book with me as well. So use that link. I'll send it out once again at the end to go ahead and, continue on. Um, so if this were me, my bias right now would be the moment this hits 55.77, I'm looking to see if it pushes higher. If this market, and I'm going to put this in a line, if this market breaks above 56.83, I will then anticipate it to crawl a little bit higher. Okay, I'll then anticipate it to crawl a little bit higher. If you want, what I'll do, let me do some labeling here. Oops. Command Z, one click. This is what I'm gonna do. I'm gonna write here. If we break this line, look for market to go higher. Look for resistance here. Look for market to fall back here. Ultimate, I should say this. Next low for market. So now I'm just going to move things. there, there. Okay. All right. So if you guys want to, go ahead and take a screenshot of that and you can just type in done. All right. The level of the down gap. So you have 5310 is down gap one, down gap two is 4421, and down gap three is 4234. But if you want to, go ahead and take a screenshot of that and just type in done when you got it done. Screenshot it. Thank you, Michelle and George, Philip. Beautiful. Dan, thank you. David, thank you. Kyla, thank you. Awesome. So, last uh couple of other things I want to discuss this week. You know, we do have some earnings coming out. We have Amazon coming out May 1st. We have Apple coming out May 1st. Both of those are at 5 o'clock. We have ADP as well, April 30th. Um, BDX, that's just a stock I've used for a long time. That's that's coming out as well. Let's see. There's a couple others that I was looking at. Chevron comes out May 2nd. So big ones, Apple, Amazon May 1st, Chevron May 2nd. Um, and one more. Let me do portfolio. Let me see if there's one other that I thought. Apple, Amazon, CDNS comes out April 28th, so on Monday, and Coca-Cola on April 29th. Okay. Microsoft, let me see. Do they come, when do they come out? They should be this week as well. It looks like a lot of tech. Yep, Microsoft April 30th as well. Good call on that, Randy. Thank you for that. That was the other one I was looking for. Right? So, and this is the other thing, guys, is I'm gonna use this and like I'm gonna add stuff to our kind of fictitious portfolio that we have being built. And cancel. Let me go today's news. So right now, what is I thought we had a bunch in our portfolio. I don't know where it went. Yeah. Huh. Well, I'll figure it out and see what's going wrong with that. But the last thing is news here. If we look at all news, um, trade headlines, that's continues to be dominant, right? We have US and China. Hell, we don't even know if they've actually talked because nobody's saying that they talked or not talked. Alphabet doing a $70 billion buyback. Um, Let's see. Consumer sentiment for April was better than expected, but still the lowest since 2022. And then we still have still Google and Alphabet, still in talks about the government stepping in and splitting them up, et cetera, et cetera, et cetera. That's all sorts of craziness, and we'll keep you abreast of that stuff. But other than that, Huawei is introducing a new chip this this week. Hopefully, just to let everybody know, if you're in NVIDIA, right? We'll start there with the analysis section here. I got about 10 minutes here before we do that. If we go in NVIDIA, I would, if I were you personally, just me, right? And you want to keep, you want to protect yourself against the downside, don't want it to risk too much. Look at where a good profit target is for you. Perhaps maybe put in a trailing stop somewhere to where it will stop you out if the market falls, let's say below 99 bucks or at below 100 bucks, because Huawei is coming out with a new chip that will compete with Nvidia's Blackwell. Um, you know, that's just one of those things that happens when it take competitors can buy your product, dissect it, and rebuild it and build it better, faster, quicker, and cheaper because they don't have to go through the R&D that you had to go through, right? So that's one of those that should be on your radar as soon as Huawei makes that announcement. I expect high volatility out of that. Again, we still have that death cross there, but buyers are still in control. This was as of Friday. Obviously, market's closed. But what are a couple of stocks that you guys want to look at? And I see that, we had a lot of people join in late here today. So this is what I'm going to do. I am going to for those of you guys that just joined, I have a Discord channel where you guys can chat to me and ask questions and stuff like that during the week. So if you just got here, bam, there's a link to the Oh, that's my Calendly link. That's a link to book time with me if you want to. And we'll talk about that. But this is the Discord channel link for those of you guys that are new. Would love for you guys to join this Discord. I post a lot of news stuff, a lot of different things here all the time, different videos and things like that as well. So, chat with me here, ask questions. If you guys want to see something in one of these sessions, chat it here, and I will definitely make sure to send it. Binoy, interesting. Let's see. Let me reply to you, sir. Oh, that's why. Here it is. Here's the Discord link again. And here is the Calendly link again. Sorry about that. All right, so somebody asked for PLTR. Let's take a look at that. PLTR. Palantir Technologies. Look, I think Palantir, and I've been a big, big, big buyer of Palantir for a long, long time. Since they went public in 2021, I bought them and let it go all the way down, and then bought, and let it rally all the way up. And we're just continuing to hold it because I believe in the age of digitalization that we are in, this current environment, they are one of the best protectors of information and safeguarding on the internet that exists, them and Snowflake. But I've always thought Palantir was a better company than Snowflake. And it is proving to be so as of now, right? They basically replaced Firelight when Firelight was basically got hacked in 2021, and this company is unbelievable how they approach data security and cybersecurity, and the government's using them, the military is using them, and companies are just going over to them in droves. So I really like their company as well. So continue, if it again, one of the things I do, and I am perfectly okay with this, is that let's say I bought Palantir at 41 bucks, okay? And it's now sitting at $112. Well, I don't know about y'all, but I like to protect my money, right? So for me, I would set a stop at, I don't know, probably 90 bucks, right? Just under here. Because what would happen is, well, the worst thing that happens to me is I more than made 100%. The best thing that happens to me is the market continues to go up, right? If you're not comfortable there, well, then just set it down to right in here, right? Or right here at 74, because you don't want to lose out on that money, right? You can always rebuy in, and you're buying less, but you're buying it with the profits that you had. So that's one. Oh, good old Salesforce, huh? Mark Benioff fan. Salesforce is going, they had an acquisition. Every time they acquire anything, I swear it's like the market treats them like they're horrible at what they do. But they had an acquisition, things went well, and it's down Oh well, I can see this coming up. The problem I do see with Salesforce is they've gotten really, really, really expensive. And there's no new entrants. There's like Zoho and Go High Level and all these companies that include everything Salesforce has, but for way cheaper. So if I'm a company and I need to cut a cost and Salesforce costs me $300-400 a user and Go High Level costs me $10 a user, well, what do you think? You know what I mean? What do you think? Absolutely. So, that's one of the problems with Salesforce. Sylvain said great stock for strangles. Absolutely. Yes. Not strangling yourself, right, Sylvain? Just the market, right? I never got that one, right? Strangles, I don't get that one, you know? So only strangle only strangle ticker symbols, not your kids, not anybody, okay? So again, here's the thing though, I Salesforce, if we're looking at fibs on Salesforce, mm, that's two left to the right. And did we get another one? Bam. We're right at that level where this could push down to 182. Okay. And then we have one more Marvell, Marvl, um, Marvell Technologies. Look, I love that there's some gaps up in this, right? Like there's a gap right there that I know will get filled, but there's also a gap down there. And, um, let's look fib wise there to there. So this could come back up and fill this gap. Depending on their earnings, right? They have earnings coming up on Thursday, May 29th. So, end of May, they will have earnings. So, depending on earnings, they may look to push back up, depending on, I mean, they've only missed earnings, what? One, two, three, four, five, six, seven, 8 times. And when did they? That was Q1, Q1, Q end of Q3, Q1, yeah, Q3, Q3, Q1, and Q2. So, I mean, the only time they ended up reporting missing earnings is Q1 and Q3, Q1 and Q4. So, reporting for Q3 and Q4. So, hey, you're kind of probably safe here on them. This is a great company. I don't, at a good price. And so let's see. Any other questions here before we begin to wrap this up? I do have another speaking engagement coming up in a couple of minutes, so I can probably take one or two more questions here. Any other questions? Going once. All right, guys. Well, look, uh, FTAI. Um, hmm, Wild swings here. Look at that. So I could see this getting back to 47 from market structure wise. Buyers are in control. If I look at my hedge fund trender, we do have buying power in here. So if it breaks above 113, then yeah, I would begin to start buying it. Okay. If it breaks above 113, then begin to start buying it. Crypto. Absolutely. I'll do a couple of cryptos for you. So we'll hit the majors. Bitcoin. Um, Bitcoin itself, we have sellers about to take control. I think this 93 to 97,000 area was a area of profit taking for some banks and institutions and things like that. And so you have crypto kind of uh, coming up here, but let's be real, the president is and this administration is very open to crypto. Um, and there could be some continued great things coming from it. We will see. That is for sure. But right now, probably we'll get a little bit of a pullback into that maybe 87, probably about 90,000, where there's some support and resistance right in here. If I take that down, right? So probably a pullback for 3,000 bucks, and then probably in the next pushback up into the 100,000 range or so. I'm not anti Bitcoin or anything like that. That's just the waves of the market. Ethereum. Ethereum is, we're back into that $1,500 range, and that's where it's living right now. And sellers are about to take control again on Ethereum, so we shall see. And then there's other one, SUI. I really like this company a lot because of what they do. I was a buyer and a holder, got out of it at 5, to let the fall just kind of happen, and then back in it as well. And I'll probably get out again at around $3 because I think this will have a 50 to 70 cent fall and then rally back up. So crypto, there is opportunities in crypto. Just be very, very careful. Especially now with so many scams and so many things, trading like on fractions of a minute and having to go with what appears to be real exchanges, but they're actually off-market exchanges, and it's all sorts of craziness going on out there. And I don't want people to lose money, right? I don't want people to lose money. So that's my biggest thing. So, and that's what we do. Is I look for protection. I look for helping people set up for the long time because I believe the goal is to get rich right, not to get rich quick. All right. So, with that said, guys, I thank all of you, all right, for being here today. We're going to continue this on next week and continue. One of these weeks, we're going to not, nail down everybody, have a group kind of panel discussion. I think it'll be amazing to have, and can't wait to speak to you all. I will send out this link one more time if you didn't get it. Look, if the goal is for you to protect your income and retire well and pass on wealth, then I want you to be able to achieve that goal, and I want to be able to potentially play a part in it. We do free evaluations. That's all we do. And if we can help, we can. And if we can't, we can't. That's it. There's no obligation, but if the market falls the way it could, these next few years, the decisions you make now are going to separate those that can retire from those that struggle. So have a good one, guys. Here's that link. Really appreciate all of you. And I will see you guys in another webinar this week very, very soon. Have a good one. Thank you.